$10,000 and 2 stocks. That's the whole plan. And before you click away, hear me out, because this might be the most straightforward conversation about building real wealth you've heard all year. We're not talking about chasing meme coins or gambling on some biotech company with 3 employees in a dream. We're talking about the literal backbone of the artificial intelligence revolution. The world is being rewired right now. And if you miss this transition, it won't be like missing out on some niche trend. It's closer to missing the internet in 1995 or electricity in 1880. 2 companies sit at the center of all of it. One owns the hardware layer that every AI model on Earth runs on, and the other quietly knows more about you, your government, and your supply chain than you probably feel comfortable admitting. Let's start with the obvious one, NVIDIA, because if artificial intelligence is the gold rush, NVIDIA is the company selling every single pickaxe, shovel, and mining cart to every prospector on the planet. Their GPUs aren't just popular, they are functionally irreplaceable right now, and their next generation Blackwell and Rubin chip architectures are expected to sustain revenue and net income growth at a pace that should make every spreadsheet analyst need a quiet moment alone. Then there's Palantir, and this one is the dark horse that most casual investors still sleep on, even after it surged over 1,800% in 3 years. While NVIDIA powers the computation, Palantir powers the decisions governments use it to model battlefields and logistics in real time. And commercial clients use it to manage supply chains so complex they'd make your head spin just reading the org chart. Now, here's where we have to pump the brakes and acknowledge the psychological tension in the room. Both of these stocks have already made a lot of people a lot of money, and your brain is probably screaming that the easy gains are gone. That feeling is real, it is human, and it is also historically one of the most expensive feelings an investor can act on, because the same people who said Amazon was too expensive at $100 watched it hit $3,000. Think about every major technology wave, mainframes, personal computers, the internet, smartphones, and notice that in each cycle, the dominant infrastructure provider looked overvalued at roughly the 20 to 30% mark of its actual total run. We are in the early innings of a multi-decade AI build-out, and calling the top right now is a little like someone in 2002 saying broadband had already peaked. The misconception that trips most people up is the idea that a stock that's already up 600% has no room left. But growth isn't a tank with a fixed capacity. It's a function of total addressable market, competitive moat, and execution. NVIDIA's total addressable market keeps expanding because every new sector that adopts AI becomes a new customer, and Palantir's government and enterprise contracts create the kind of sticky, recurring revenue that accountants dream about in the middle of the night. Here's the practical playbook with your $10,000. You're not betting the house. You're planting 2 trees in the most fertile soil on the map, and the strategy is almost aggressively simple. Split your position between the 2. Set a calendar reminder to revisit your thesis every 6 months rather than your portfolio every 6 minutes, and resist the urge to sell the moment one of them has a rough earnings quarter, because rough quarters are where weak hands exit and strong portfolios are actually built. Position sizing and emotional discipline will do more for your long-term returns than any hot tip or complex option strategy ever will. And the irony is that the boring approach, buy quality, hold conviction, ignore noise, is the one Wall Street never sells you, because there's no commission in patience. The traders who made fortunes in Amazon, Apple, and Microsoft didn't do it by being clever. They did it by being stubbornly, almost annoyingly consistent. Volatility is not your enemy here. It is actually the price of admission for the kind of returns these companies have historically delivered. And every dip that scared someone out of NVIDIA over the last 5 years was quietly a gift to the person who stayed in their seat. The goal is not to feel good about every day in the market. The goal is to feel good about every decade. There's a certain philosophical clarity that comes from simplifying your investment framework down to its essential truth. The world needs AI infrastructure the way it needed electricity, the way it needed semiconductors, and the way it needed the internet. You don't have to predict which application wins, which model dominates, or which startup gets acquired. You just have to own the pipes that all of it flows through. Comfort with uncertainty is actually a superpower in investing. And the beautiful thing about this particular thesis is that you don't need to be right about every detail. You just need to be roughly right about the direction of a technological shift that every major government and Fortune 500 company is already fully committed to funding. Even a wrong quarter, a bad headline, or a market correction doesn't change the underlying fact that the world is spending trillions building on top of what these two companies provide. So take a breath, check your emotions at the door, and remember that the best investment decisions rarely feel exciting in the moment. They feel boring, almost obvious, and sometimes even a little late, which is usually how you know you're on the right side of history. Discipline, sizing, and consistency aren't the sexy part of the story, but they are the part that actually shows up in your account balance 10 years from now. Whether you go all in on this thesis or allocate just a corner of your portfolio to test the waters, the real win is building a process you can repeat without panic, without greed, and without needing to check your phone every 20 minutes. And if you're ready to take that next step, whether it's investing, real estate, home contracting, work, or finding the right lender, check out our links in the description below and let's get you started.